India-US trade deal and what has come by the way of new revelations in the Bangladesh-US trade deal as well. Now, the White House has released a fact sheet on the recently signed India-US trade deal. The fact sheet claims that President Trump agreed to remove the additional 25% tariff on imports from India in recognition of India's commitment to stop purchasing Russian Federation oil. This narrative push from Washington is coming a day after India stated categorically that its oil import decisions will be guided by national interest alone. And even as the contentious deal and the conversation on Russian oil continues between New Delhi and Washington, India's advantage of securing a marginal tariff edge in labor-intensive sectors seem to have effectively disappeared overnight. Bangladesh has now struck its own deal with Washington, one that could flip the competitive balance in global textiles and potentially hurt Indian exporters. Bangladesh has agreed to host of steep American demands now, as per the latest details emerging between Bangladesh and the US by the virtue of that trade deal, including a commitment to buy $3.5 billion worth of US agriculture products, $15 billion in US energy over 15 years, and even aircraft purchases. In return, Washington has offered zero reciprocal tariff on certain Bangladeshi textiles and apparel exports subject to quotas. At the same time, the US has fixed reciprocal tariffs at 19% for Bangladesh, just 1 percentage point higher than India's 18%. But that small margin is now irrelevant. Textiles are the backbone of Bangladesh's economy. The country is the second largest textile exporter in the world after China, and garments remain its single biggest foreign exchange earner. That explains the urgency. With India signing trade agreement with the US, UK and EU, Bangladesh moved quickly, especially as those deals favor labor-intensive sectors like textiles and footwear, where both the countries compete head-to-head. According to the joint statement between Bangladesh and the US, Bangladesh will now get zero tariff only if it buys more US cotton and man-made fibre inputs. The larger the US raw material import, the larger the tariff-free quota. That raises a red flag for India, currently Bangladesh's biggest supplier of cotton yarn and textile inputs as well. India believed it would expand textile exports to the US with an 18% tariff, while competitors like Bangladesh faced higher rates. Experts, however, say that this new announcement means that Bangladesh could now export garments at zero duty, reversing India's perceived advantage into a clear tariff disadvantage. Markets today reacted immediately. Textile stocks fell across the board on Tuesday, with Gokaldas exports sliding by as much as 5%, reflecting investor concerns over lost competitiveness following the US-Bangladesh agreement. Similar scenes were also witnessed across various textile exporters who are listed in Indian markets as well. Now, all of this is unfolding against worsening India-Bangladesh relations. Last year, India terminated Bangladesh's transshipment facility, and the remarks by Bangladesh's chief advisor Mohammad Yunus describing Dhaka as the guardian of the ocean for India's northeast and hinting at Chinese economic integration further strained the ties. India has spent over a decade building logistics access to the northeast through Bangladesh. Those plans have now been stalled after the ouster of Sheikh Hasina and the installation of an interim government by Mohammad Yunus. What was expected to be a narrow but crucial tariff edge for India now has diminished, and trade, especially textile trade, has become a geopolitical pressure point.